Hello, everyone. Thank you so much for coming today. We are the Harvard Federal Credit Union. We're very excited to be doing this webinar with you guys today. Today, we're going to be talking about navigating the United States financial system.
Whoa.
There's a lot going on there, so we're going to help lay it out for you. It's especially important for anybody that really needs help with it. So we're going to do our best to help guide you in the right direction and see what we can do to help figure it out. And we'll hopefully be answering questions as well if you guys have questions. So just a little bit about kind of some groundkeeping before we jump into the actual presentation while people are kind of filtering in. Just a little intro. So we are the Harvard Federal Credit Union's community engagement team. Representing our team today, we have me, Ty Koppelson, and my coworker, Terrence. That's right. One thing we like to say is like, why should you listen to us? And that's because we are actually certified credit union financial counselors. So we do have a bit of a certification to show that we know what we're talking about. Yeah, okay, that's true. Yeah, you're right. An official certification that proves that we know at least what we're talking about. So we're going to do our best to help you out today. And we really are passionate about getting in the community, helping people out, doing these workshops and webinars is like really, really our driving force. So it's really, really great. And we're talking a little bit about today's agenda. We're going to introduce the credit union. We're going to talk a little bit about ITIN, which is really important. That's one of the first steps you're going to want to do and take care of. Talking about how the American checking and savings account system works, as well as doing a little bit of an introduction into establishing credit, borrowing money, what that means, what that looks like, and then just talk about a few extra tips for financial success in the U.S. But talking about the credit union and what the difference between a credit union and a bank is, this is a very big question we always get, especially for people that are new to the US because it's a little bit confusing sometimes. So credit unions the difference between a credit union and a bank is that credit unions are not for profit. And basically what that means is that we are not trying to make a profit off of our members. Like we don't have to make money for shareholders like banks do. So banks need to try to like make as much money as they can. Credit unions, our focus is actually different. Our main focus is on our community, on our members, like being good community partners, really helping people. That's one of the reasons why we do all of this great financial education webinars and stuff like that, is because that is our number one drive. Our whole team is about community engagement, getting in the community, helping out. So we have a lot of great services. We have a lot of great different benefits for our members and for our community, which we will talk about a little bit during the presentation about what kind of accounts we have and things like that. But in general, we have very few fees for any of our services like other banks might. We have really generally good interest rates and things like that. We have different benefits, like we refund all ATM fees if you use our debit card, even if it's a different bank that's ATM charges you that fee, we go ahead and give you that money back anyway, because we're able to give back a little bit more. We're able to reinvest the profit we do make into our community, into our members. So it's really great. So that's just a little intro to us and why credit union is a little bit different and how we are able to help out a little bit more. Perfect. But we are actually going to talk a little bit more about international stuff today. So let's do that. We actually have a really great part of our website that's all about international members. So this is definitely a website I would like a link I would check out and bookmark. We're actually we can put a link, I think, into the chat for you guys, so it's like easy for you to find it. But this website's going to kind of like lay out for you from our bank or our credit union everything that we are able to, like all the information you need for being like an international member of our institution, like how checking accounts would work, how credit cards would work, how all that stuff would work, and all of the kind of convenient like information you're going to need. So definitely take a look at that when you get a chance. It's going to be really important. But that being said, being new here and being an international person, you might not choose to bank with us, and that's totally fine. We want to help you figure out what's going to be the best fit for you, but this is a great page that will help get you some more information just kind of in general as well. So that's going to be helpful. Another thing that's helpful is we have a whole new branch today, or not today, in general. We opened up a new branch at 1 Brigham Circle on Tremont Street in Boston. We actually have a really special promotion going on right now. So if you are still looking for kind of which bank or financial institution you want to join, we're going to provide some more information about our particular stuff we have today. But if you open a new checking account at this new branch by the end of September, or before the end of September, you can get $100. You can earn $100 that will be deposited directly into your account from us, as long as you follow the sort of promotional guidelines there. So that's a cool benefit, but whether or not you choose to bank with us or someone else, we definitely want to help you learn about what's going to be the most important information when setting up an American bank account.
Cool. All right, so let's jump into a little bit of the meat and potatoes of today's presentation. We're going to talk all about ITINs. So what the acronym means, it's this individual taxpayer identification number. We'll discuss what it is, who's eligible for it, and what you can and cannot do with an ITIN. Before we get started and get really into it, I do want to highlight that it is not necessary for you to, I guess the light does not want an ITIN number. That's totally okay. You do not need an ITIN number or a social security number to join Harvard Federal Credit Union. As long as you have a Harvard affiliation or affiliate with one of our hospitals, you can join, but we will ask that you do apply and start the process and get your ITIN within 30 days. So it's a good idea if you are curious about it, if you are new to the States, especially if you are a new student or new staff at one of the hospitals, to go ahead and get that process started. So because it does take a good amount of time.
Yes, I've heard it can actually take about up to 7 weeks. So that is a long time. So it's definitely important to just kind of start that process before you might need it. But as long as you're like along the way there, you can get started with opening account, at least with our institution.
Yes. All right. So what is an ITIN? And if you are curious, please use the QR code on the screen. It'll take you to the IRS website where you can begin to read and start the application process. So when arriving in the US for the first time, it's important to obtain documentation to establish yourself, which is an ITI number. You need cards, ID cards, passports, visas, and other immigration documents, and eventually a social security number or an ITIN number. So ITIN numbers are, for short, a tax processing number that is given by the Internal Revenue Service, or the IRS, to those who are ineligible for a social security number. So let's say you are here on a visa, or here as a student, or here just to do for some work on a project. You may not find yourself eligible for a social security number. That's totally okay, but you also might be earning income as well. So how to go about reporting that income and writing it off for taxes and whatnot, this is where your ITIN comes in, and the light is going to keep doing that. So we're going to just gonna keep going.
We'll figure it out.
Yes. The IRS is the governing entity responsible for processing taxes and all things revenue, which is why you're going to get your ITIN number from them. And all taxpayers, regardless of immigration status, are required to have some form of numerical identification for tax reporting and processing services. I know that sounds like it's really technical, and it is, it's supposed to. It's because it has to do with taxes, has to do with your income, and having some number that identifies you to the IRS is what's necessary for you to go about paying taxes and honestly beginning to build and establish some form of residency here in the US. And honestly, that's it for now. Let's keep going. Who's eligible? Any individual with foreign status, including non-residents, students, professors, or researchers, and foreign nationals who conduct business in the US. Anybody who's an undocumented immigrant is eligible to qualify and start the process for an ITIN. Anybody who has an expired visa can go about obtaining and starting the process of an ITIN. And any individual residing and working in the US who is not eligible for a social security number. So I'm going to go ahead and put a link in the chat. It takes you directly to who and who's eligible to qualify to start the process to get an ITIN number. Also, dependents or spouses of US citizens. So if you are a undocumented immigrant and you are married to somebody or has a dependent, you are eligible for an ITIN number and you can start the process. And any other individual residing and working in the US who again is not eligible for a social security number. I know that sounds like very technical, and it is, it's supposed to be, but I do want to make sure that you get all the information possible. Next, so what an ITIN number can be used for? It can be used for, so it's not a replacement for social security numbers, but it can be used for opening a checking account and savings account. It can be used for applying for credit, obtaining a driver's license or state ID, and or renting an apartment. So to do these things, truthfully, this is what will help you establish residency here in the US. And it is required when it comes to getting a house and getting residence, because what they'll be looking at is your credit score. Are you able to make payments on time? Are you able to manage your finances in a way that allows you to say, okay, yes, I can have a credit card, I can get a loan, I can get a driver's license, and these things are important. When applying, be sure to double check with the specific entity that you're applying to ensure that you have the correct documentation. And bear in mind, there are limitations to what you can and cannot do with an ITIN. While there are certain financial services that you can access with an ITIN, this does not include all financial services. ITINs do not authorize employment and allow Social Security benefits or provide immigration status. So if you are not currently, if you are undocumented immigrant, you can qualify for an ITIN number. So that way you can go about building relationships for financial purposes, but it does not provide immigration status. A very important distinction that I want to make clear. So how to apply for an ITIN? File a W-7 application for IRS individual taxpayer identification number form with the IRS. So you can submit this form via mail or in person at one of the IRS taxpayer assistance centers near you, which can be found on the IRS's website. Be sure to double check that you have all the correct documentation needed to process your ITIN request. And Ty is very graciously putting the link in the chat, which lets you know how do I apply for an ITIN, where you can find your local IRS office. And on that website, you can find a list of qualified documentation. So there's 13 documents that will be accepted. You don't need to have all of them, but you do need to have some combination of all of them that identify who you are, where you live, and it will be different depending on if you are a minor, if you are someone who is working, or if you are a student. Cool. You can submit your application at any point if you have a filing or reporting requirement to meet, which can include when filing your federal income tax return, which if you are earning income, you most likely will have to file a federal income tax return to claim it. And as long as your application is fully complete when submitted and you are eligible for an ITIN, you can typically expect to receive a letter from the IRS assigning your ITIN within 7 weeks. It does take some time, but that is if everything goes right the first time. There are cases where there's some missing documentation or some incomplete documentation, and that can definitely delay and stall the process. You can call the IRS to check on the status of your application if you have not received your ITIN 7 weeks after submitting your application. Then you can discuss and say, hey, what am I missing? What's going on? And for any more information about applying for an ITIN or in details on how to follow up an application, again, we have a very handy dandy QR code on the screen that you can scan, and it will take you to the IRS website where you can learn more.
Cool. All right. Thank you, Terrence. I'm going to talk a little bit more now about checking and savings accounts in the US. There's a lot of different types of banks, credit unions, financial institutions with a lot of different types of checkings and savings account, that kind of thing. So it's going to be important to kind of like understand or know what to look for, know what you're looking for, that kind of thing, and how to apply that sort of thing. So let's kind of get into it. The first thing I always like to say is do your research first. Make sure you look into what's important to you, how the system works, like what kind of different types of accounts or banks or financial institutions you might want to look into, because some banks have, there are more of those banks in your area, perhaps, such as like a Bank of America. Here in Boston, we have a lot of Citizens banks, Santander, stuff like that. So if like an institution that has a lot of a footprint, like a lot of different branches, is in a lot of areas and has like more ATMs, that kind of thing, you might want to look for it, then look into which ones are going to be in your area, that kind of thing. So it's going to be important to kind of like figure out what's important to you in terms of like what you want out of a bank or a financial institution, such as a credit union, and figure out what's going to be how it's going to work for you. So for example, to open an account in the Harvard FCU branch as an international student, you need to bring passport, Harvard ID or Harvard acceptance letter, and an initial deposit of $5 for the savings and checking account. So if you're not a student, then you'd need passport, Harvard ID, initial deposit, and proof of address, such as like a utility bill or something like that, something that shows printed that you received that was sent to your address in your name. So
Also, I do want to mention, not all financial institutions are created equal.
right.
As Ty mentioned, yes, you can look to see which one is most convenient for you depending on location, but you also want to see which one gives you the best bang for your buck depending on your financial status and what you're looking to hope for. Some of them offer affiliated relationships with investment accounts if that's what you're interested in. And we are a credit union, so that we're a little bit different from a bank, as Ty mentioned at the beginning, not-for-profit status. And depending on what your needs are, we might be a better fit for you. Bank of America might be a better fit, or like a bigger bank might be a better fit. So again, do your research and see what your needs are and identify where you want to go. And you also don't have to have one. You can have multiple for different reasons and purposes.
That's true. Yeah, good point. So as we kind of talked about, determine what's important to you, right? So like, is something with very few or no fees most important to you? Are like specific ATMs access important to you, like a big footprint, like one of the bigger banks, something like that? Is the ability to transfer money to family internationally something that you would need or something that's really important to you? If you have an ITIN, does this financial institution accept this for their products you may be interested in over time? We do, but not all banks are created equal, as Terrence said. So researching which institution and what's going to be access like available to you, and like what they're going to be, what their sort of terms are, how many fees they're going to have, things like that are going to be things you want to look up. But the good news is that pretty much any bank's website, it's going to be very easy to get the fine print on those things, very easy to figure out what kind of information that they would require for you in that way.
I do want to mention when it comes to researching again, that it doesn't have to be, 2 to 3, 4 hours of researching. If I were you and you're new to the US, I would first create a list of what is important to you. If you are leading to send wires internationally, that way when you are looking, you can type into Google, which banks give me the cheapest wire transaction like costs.
Yeah.
You get a quick list, and then you can start divvying it out from there, as opposed to just going into Google and like saying, what are all the financial institutions? You're gonna get a very long list, and you're gonna have to read a lot. Identify what you need first, what's important to you, and then start your search from there.
Yeah, good point. And then as we talked a little bit about, you're going to want to make sure you have all the documentation you would need for that specific institution to set up your accounts. We had talked about previously that for us, you would need like Harvard ID or Harvard acceptance letter, depending on your situation. You'd need your passport and you need your ITIN number. But different institutions may require different things. Some of those things might include the passport, like we said, an ID, a birth certificate, proof of address, which we talked
for some of them.
Yeah, some of them proof of income as well. State ID sometimes, but as we mentioned, your ITIN can help you with some of that stuff as well, such as getting like a state ID or driver's license, that sort of thing. So just something to keep in mind, that you're going to want to know which type of documentation you would need for the institution you're going to, whether that institution accepts an ITIN or would want a social security number specifically, that kind of thing. So figure out your eligibility, figure out what things you kind of need so you can start that process ahead of time as well. Because some of those things, depending on which types of ID or verification, may take more time for you to acquire. So depending on which one it is, you're going to want to gather those documents ahead of time so you're ready to go when it's time to open your accounts. But now that we've talked about how to prepare for opening an account, let's talk about what those actually are. So in the US, we have two main types of accounts that people most often open, and those are checking accounts and savings accounts. A checking account is intended for day-to-day use. So this is where your funds would typically be directly deposited from your job or from your stipend or anything like that. And then they would be withdrawn into multiple different ways to use on funds. These would typically be done with a debit card. Debit card is a way to directly access your checking account and make purchases. Debit card usually has a PIN number, which you can use at time of purchase or at an ATM to withdraw cash. Checking accounts can be linked directly to your employer so that they can put your paycheck directly into your account for you. Depending on your financial institution, you may be able to conduct a variety of different services and transactions online or through mobile banking. Checking accounts are not limited on how many transactions you can do in a day or a month or anything like that. They're basically meant to be used to put your money in and then use it as much as you want to access your money. Typically, there are no fees or anything for using your debit card at a store, anything like that. It is just a way to access your money. But oftentimes, ATMs will charge a fee. This tends to be like if you have a Bank of America debit card, you can go to a Bank of America ATM. Usually, that won't charge you a fee because it is the ATM directly for your bank. But if you go to a privately owned ATM or to a different bank's ATM, that other bank will probably charge you a fee to withdraw cash from that ATM because it's not affiliated with your bank card. Now, one of the benefits I did mention earlier is that anytime an ATM charges you a fee and you have the Harvard FCU debit card, we refund that fee into your account for you. So that's one of the ways that we are able to give back. But checking accounts are a great way to make sure that your money is protected and safe. When you use a debit card to pay, that's a protected transaction. You can always file a dispute with your bank if for some reason you notice that somebody else got your debit card information and made a purchase or something like that that wasn't you. You were able to file a process to get that money charged back and to secure your account, secure your funds. So it's a great way to make sure that you can maintain access to your account, but protect your spending as well.
Also, not all checking accounts are created equal. The same way not all financial institutions are created equal. Some checking accounts offer cash back bonuses. Some checking accounts offer premium interest. We happen to offer both here at the credit union. Some checking accounts have different types of fees for overdrafting if that ever happens.
That's true. Yeah.
Some checking accounts have certain restrictions where you might have a minimum requirement or minimum balance to have within it on a regular basis, so that way you do not incur a fee. Some checking accounts have maintenance fees. So again, not everything is created equal, and it is not unfortunately, but fortunately, your job as a consumer to do your research before you begin building that relationship with the institution to determine, does this checking account work for me and my needs?
Yes, absolutely. Very good point. And the good news is that all banks have on their website a list of their different types of checking accounts, what the requirements are for those checking accounts. A lot of them are often like, you need to use your debit card this many times per month or something like that to keep the account kind of active and to make sure that you are using it and not just like letting it sit there, because banks want to have sort of active members. Now, if this is your financial institution and you're using your card to use your money to live your life, that usually won't be an issue. But it's important to understand like the structure of those accounts depending on the bank, because they can be different at any different one, and understand like what the bank requires of you and if you would be charged a fee if certain things weren't met. So keep an eye out for that. Make sure you do research. The bank or credit union that you choose to look into will have a good landing page on their website that will have more information about those types of accounts and what is required. So then the other main type of account that we have here in the US are savings accounts. So these are accounts that are designed while checking accounts are designed for everyday use, savings accounts are made for putting your money away for emergencies or for future, like saving it up over time, and saving it for longer term goals or an emergency or something like that. And so savings accounts can be opened at the same time as a checking account. Generally, the recommendation is you kind of have one of each. You have your checking account for expenses and for spending your money, and then you have your savings account to save your money, put it away. And there are some benefits to putting your money in those types of accounts, and like keeping it in a place to be saved for later. You don't need to own a savings account. Totally up to you. But in general, it's nice to have a different place to put things so that all of your transactions, everything you're doing is in one account. It's very easy to kind of lose track of everything that's going on and understand kind of how much you're able to save for later if you're trying to do all of that out of one account. So something to keep in mind. Now, savings accounts do have a limit generally on how many transactions, like transfers money you can take out of that account on a monthly basis. I believe usually it's about 6 transactions a month. So the savings account is meant to be kind of put aside and not usually accessed unless you need it, right? So you can take your money from there. It's totally okay, but you're just going to want to make sure that the priority of your transactions and your expenses and your business are being done out of your checking account, which is the purpose for that. So it's generally like you would make deposits into your savings to put some money away and keep some money, build it up over time. And there are different benefits, depending on the bank, that you get for doing that. Here at the Harvard Federal Credit Union, we have a high yield savings account, which means you have an interest that you are earning on the money in your savings account over time, which is really cool. So the benefit of putting your money aside and saving it in this different account is that you're going to be earning money on the money you already have in your account slowly, but the high yield is pretty good in today's market for what a savings account can give you as a return. So the benefit of putting your money aside and saving it for later is that it's going to be passively earning you more money over time as it sits there.
Also, I do want to mention that there is not a particular limit to how many checking accounts you can have and savings accounts as well. I know the typical recommendation is like one checking, one savings, but we do have other presentations that go into having multiple checking accounts and multiple savings accounts that serve different purposes and different needs. And that's a little bit more advanced for those if you are new to the financial institution. But I do want to mention that that option does exist.
Yeah, and the kind of the purpose on that, just to touch on it really quickly, would be that there's a lot of different types of bills and things that are going to be coming out of your checking account eventually. You've got like rent payments, you've got different types of bills, like a phone payment, things like that are going to be monthly every time. And when all of your money is coming into or going out of one account, it can be really hard to visualize or judge how much you have and like what is already allocated for certain payments and when is that going to come out. And so you might have one number that says what your balance is, but then there's some payments that are going to be automatically coming out or being made or something like that. And so that number you see might not actually be a good representation. So I feel like I'm getting a little too complicated, but the point is that sometimes it can be helpful to separate your money into different places, which is kind of already the point of a checking and savings, so that you can allocate it easily for different things and keep an eye on it and like have a good understanding of how much you have and like what it's being used or saved for. So as part of that, savings accounts aren't generally connected to the debit card because the debit card is for making purchases. Out of like a checking account as its primary service. Well, savings account is mostly saved for when you really need it or when you've saved up for a larger purchase or a larger goal, and then you can access it when the time comes.
Right.
All right.
So establishing credit and borrowing money. This is going to be a little bit more in depth when it comes to what is credit and how to borrow money. It's one of the most crucial parts of navigating the U.S. financial system.
One of the hardest parts too.
Absolutely. And we'll cover the basics in this. This is not going to be all encompassing. You can please visit our website for a more in-depth, deep dive into this topic. But for now, we'll do our best to give you the enough to be dangerous with. So credit is the ability. Well, first off, what is credit? Let's level set and just talk about what it is, how to use it, and what's going on. Credit is the ability to borrow money you may not have immediately available to pay for something now. So let's say, as Ty mentioned, in the checking accounts, let's say you have $100 in a checking account available to you to spend, and an emergency pops up. You have a flat tire, something happens, maybe you need to go grocery shopping, whatever, and you need to spend $200, or the cost is $200, but you only have $100 in your checking account. How do you pay for the emergency when you only have $100 available to you? This is where credit comes in, where it's not free money because you will have to pay it back. But credit will allow you to cover the cost of the extra $100 and put it all on the credit card, $200, and that will allow you to pay for the emergency and kind of float through. At the same time, that doesn't necessarily mean that that money is yours to use forever, willy-nilly. It will be paid back usually with interest. So a more technical definition is credit is the ability to borrow money you may not have immediately available to pay for something now. With the agreement, you'll pay the lender or creditor back later, typically with interest. You may already be familiar with the basic concept of credit, as many other countries do have some sort of borrowing system. However, there are some nuances to the US credit system that makes it unique. Establishing credit and maintaining a high credit score is incredibly important, as it can impact your ability to secure even rental housing, make large purchases, and some employers even do a credit check before employing someone. So we're going to discuss credit in more detail and how to build credit from scratch within the US system. So one thing that you may have heard or have heard discussed while you're going around asking people what's going on is a credit score. A credit score is a 3-digit number that uses information from your credit report to predict how likely you are to pay back as agreed credit that may have been extended to you. What does that mean? It's really complicated, right? So it's 3-digit number. They range from poor on the lower side, negative, not poor as in bad, but poor as in like a lower credit score, usually about 400 or less, up to very excellent, which is 780 and above. And they have different brackets in between. Very poor is 400 or less. Poor is 500 to 600. Fair credit is 600 to 660. Good credit is 660 to 780. And excellent credit is 780 and up. So how does this impact you as a person? To creditors, and anybody that is looking to extend some sort of loan or maybe a mortgage to you, the lower the credit score indicates that you may be a higher risk of defaulting on the loan. Defaulting on the loan means you can't pay the loan back in full. The higher the credit score, the less riskier you are, the less likely you are to default on the loan, and the more likely you are to pay it back. Therefore, if you have a lower credit score, there is a very good chance that you will have a higher interest rate. And if you have a higher credit score, you have a lower interest rate. I know that doesn't make sense if you're just coming here. The lower the number, the higher the interest rate, but the higher the number, the lower the interest rate. That's just how it is. That's the best thing I can tell you. It is important to maintain a credit score within the good and excellent range for peak credit worthiness. What that means is if you are on the higher end of the scale, then you are typically more likely to receive better and or more favorable treatment when it comes to loans, getting a house, and any other type of interaction with in its financial institution. Anything that I'm missing?
No, I think you put it really good. So I just wanted to maybe mention interest basically means you pay a little bit extra than the amount that you borrowed, right? So the interest rate that you would pay back is a percentage of the amount that you borrowed that you will be paying back in addition to the amount that you borrowed. So the benefit that people have to giving you money to borrow, whether that's a credit card or a loan or something like that, is that they will be receiving back more. So both parties benefit. You get money that you need for something that you don't have the cash for. And the person that's borrowing it, lending it to you, gets a little bit more back over time, which is the interest rate. So having a lower interest rate means that the extra amount you'll be paying back is less. If it's a higher interest rate, a larger percentage of the amount that you borrow will need to be paid back. So you'll be paying back more. And so that's how institutions are able to, if you have a low credit score, that generally means that there's a risk that you might not be able to pay back the full amount. And so to kind of protect themselves, the lenders would then have charge a higher interest rate so that they are making more back on the amount that they lend to you just in case something goes wrong. So the good news is that there are a lot of ways you can influence your credit score and make it really good, which we're going to talk about.
Okay.
Great. All right, so I can get this one started.
Sure.
A credit score is made up of, there's a number of different factors that equal into your credit score. The number one most important thing, 35% of the factors that go into your credit score for establishing if you have good credit and you are likely to pay things back is your payment history. So what that means is that are you making your payments on time, and are you paying at least the minimum amount in full? This is the number one way to make sure that you are increasing your credit score. So anytime you have borrowed money for anything, including student loans, which is generally considered one of the more prolific ways that people have borrowed money, because generally college especially is very expensive. And so we all need to take loans out to go to college to help pay for it in the time. So the good benefit of your student loans is that that is money you borrowed, you are paying it back. And by doing that on time every month and at least the minimum amount owed of your balance in full, you are increasing your credit score. Your payment history is intact. You're showing that you're able to make your payments. Make your payments on time. You're not late. You're not paying a smaller amount than you need to. And so that means that you are showing to lenders, creditors, that you are able to over time, over a long periods of time, make your payments on time and in full. And that's great. That's really the basis of what is important, what people look for when it's like, oh, we're more willing to lend you money that you need because we see that you have a good, strong history of paying it back the right amount at the right time. So that's a really big factor, 35% of the whole thing. 30% is amounts owed. And so this talks about how if you have a limit, so generally when you get a credit card, which is like sort of one of people's first kind of interactions with credit when they are new to the banking system, whether they are moving to the US for the first time or, becoming an adult or anything like that, they will get a credit card at some point. Credit card it has a limit of how much you can kind of borrow. So credit card is like the limit might be, say, $1,000, let's say. That means you can borrow up to $1,000 using your credit card, and then you'll be paying that back. However much you've borrowed, you'll pay it back over the months, depending on how long it takes you. So amounts owed is sort of keeping an amount, a 30% amount of what's available to you. So if you have that sorry, that was a little confusing. Let me better explain. Let's say you have that $1,000 limit credit card. That means that you kind of don't want to take more out than 30% of that amount. So $300. If you spend about $300 to be paid back over time, and you have more available too, but you've spent some of it and you're paying that back, that looks really good to creditors because they're like, oh, this person didn't max out their credit card. They didn't like spend all of the money available to them, and now they're needing to pay it back and scramble and figure that out. They have a good, healthy sort of amount of the amount that they're using, but also the amount that they're paying back, and they're able to maintain that good balance.
So what Ty is mentioning is your credit card utilization ratio.
Yes, thank you.
You got this. And the best way to find out this number is to take whatever your max limit is. So you probably find out when you get the credit card, like, hey, your limit is XYZ. In Ty's example is 1,000. Take that number, multiply it by 0.30 or 30%, and whatever that number is, that is your new limit.
Yeah. So if you stay within that 30% window, credit utilization window, then that looks really good to creditors because they know that you have more available too. You have a good amount of your balance. So stay between that 0 to 30% range, as Terrence to credit. So if you'll notice, that's like 65% of what makes up a credit score is those two factors. So not using too much of the credit available to you, try to keep 30% or under, and make sure you make your payments in full, or at least the minimum in full and on time every month. If you do those two things, that'll have a huge impact on your credit score and will really help push you and grow you over time to a different thing. Now, there are some other things here. Obviously, there is another 35% here that we want to talk about. So these things all do matter, but they are things to less really push and focus on, and more just like things to be aware of and make sure you have healthy habits with. So 15% is the length of your credit history. What this means is whichever is your first credit card that you get, you really want to make sure that you're keeping that open. Even if you've paid it off, like a credit card, and you don't owe anything on it, you just want to keep that credit card open. The good news is, you don't owe anything on it. You're not being charged for it, but they will, when financial institutions take a look at your credit score, they will see that you have had this really good standing credit account open under your name. And that's going to be like, oh, like this person has really responsible habits. They've been able to maintain this credit line for a long time, even if they haven't used it all that much. It's a lengthy, healthy history of established credit. Now, this also means that like the longer you are paying student loans or something like that, that's going to look really good because you have a longer history of making those payments on time and making those minimum payments. So the length of it means that like they can see that you've been doing this for a while and you have these good habits, which means that they are more likely to be able to lend you more money because they know that you have good habits when it comes to paying that back or not maxing yourself out in a way that's going to be dangerous for you.
Also, for those of you who are on the call, or on the webinar, I'm assuming you may not have a credit card already.
Right.
And if you do open one, I'm assuming it'll be your first one. Try to keep that line open for as long as possible while you're in the US, because once you do get it open and establish that credit line, it will take a little bit of time for you to build that good length of credit history. And it's best if you get your first one and just run with it for as long as you can.
Yeah, totally agree. And then these last two factors, I kind of like to lump them together because they are small, but meaningfully important to understand. So that's new credit and credit mix. And basically what this means is that different financial institutions like to see a mix of different types of credit, such as like a student loan, a credit card, maybe like an auto loan, car loan, something like that. different types of ways that you've been lent money and have been able to pay them back in a well and responsible way. And then when you have like new sources of credit to you, that does impact your credit score in a positive way. Now, this doesn't mean go and open a bunch of new credit cards to get a bunch of new credit
What?
to increase your credit score, because it's only 10% of what makes up your credit score. And having a bunch, in fact, if you do a bunch of applications for credit in a row, that can actually impact your credit score negatively. So it's important to maybe, like, you know, when the time comes, have a couple different types of credit, maybe a couple different credit cards when you're ready for it, but make sure you understand the impact that's going to have. When you have, it's good to have an old line of credit that's open and has been open for a long time. And then maybe when the time is right and you feel like you understand the benefits and the weight of it, perhaps having a new line of credit available to you so you can get a little bit more of a credit mix, have a little bit of new and a little bit of old to establish a nice little portfolio of credit. But
Also, for new credit line, it doesn't necessarily mean get a new credit card.
yeah,
It could be a mortgage, it could be an auto loan, it could be some form of installment loan where you are maybe financing a phone or something. Or if you are, let's say, what's a good installment loan? Oh, if you're getting some furniture and you want to kind of finance it through one of their like store cards, and they offer like one of those special 0% for 18 months opportunities, that does actually count as new credit, and you get some new furniture out of it. And boom, the benefit of using that particular type of credit where it's an installment is that it ends at some point. It does impact you when it comes to new credit mix, but it does have a begin date and an end date. So that way you're only making payments from the terms established at the time that you've opened the line.
Yeah. So one of the credit myths is it's just credit cards. That's not true. It's any sort of loan or any sort of money you've borrowed, student loans, anything like that, will help increase your credit score. Number one most important thing, make sure you make your payments on time and at least the minimum payment, which will be unique to how much you've borrowed, whatever it is, when you log into your, you know, credit portal on website, whatever you're going to use to make that payment. There will say a minimum payment owed, or like in your monthly, in your mail bill or something like that. There will always be a minimum of how much you need to pay that month. So make sure you always pay at least the minimum in full. In general, it's even sometimes recommended to pay more than that if you can afford it, depending. So you can pay off your credit sooner rather than later, and you'll be charged kind of less interest over time.
Okay. All right. So we got 15, we got to keep going.
Yeah.
So a credit score is determined by the credit bureau's report. Where, okay, how do you keep track of these scores? What's going on? How do I access them? Great question. Your credit score is determined by the three major credit bureaus that track your credit activity. Those bureaus are Equifax, Experian, and TransUnion. Each credit bureau provides you with a credit report that shows your credit and payment history for accounts that report to that bureau. When you open a line of credit and repay it, the creditor communicates that information to the credit bureau, which reflects on your credit report. If you have an ITIN number, you can request your credit report for each of the credit bureaus by mail, or if you have a social security number, you can visit annualcreditreport.com, which I will put in the chat right now, and we will provide, they will provide the bureau's mailing address for you, or you could go ahead and just print it out from their website automatically. While most creditors report to all three credit bureaus, some only report to one or two. So make sure to review all three reports regularly to make sure you have a full picture of everything reporting. And it's also important to look for unfamiliar activity, as this may indicate someone has and is using your information fraudulently. Scams and frauds are very rampant right now, and the best way to go about combating that and being aware of it is by checking your annual credit report on a very frequent basis. You can pull each report individually, or you can pull all three at once. If you notice an account or inquiry that you did not create or initiate, file a dispute with the credit bureau and consider asking the credit bureaus to place a freeze on your credit report so that way no one can apply for anything else using your information.
That was a whole lot, but basically the credit report bureaus will gather your information over time and help provide you with that score. So practicing those healthy habits that we talked about is going to be really helpful there.
So if you are an ITN holder, you will still be able to access your credit report from each of the credit bureaus directly. You will need to contact each bureau and submit identifying information via mail and contact the bureaus for specific information. Again, it is Experian, TransUnion, and Equifax. So we went over types of credit which is credit cards. We talked about, now we'll talk about personal loans. Personal loans are loans that are given at one time and paid back monthly for a specific time period. For example, a borrower may take out a loan for $1,200 with repayment terms of $100 per month for 12 months. Like credit cards, personal loan payments must be made on time and in full for the best credit reporting. Personal loans differ from credit cards as they provide you with the funds immediately upon loan approval and are not revolving accounts. Once a personal loan has been repaid in full, the account closes, as I mentioned earlier, when it comes with my Jordan's Furniture example. The account closes and credit history no longer accumulates. Personal loans must be paid on time each month to prevent negative reporting and additional fees and penalty. To start building credit, consider a credit builder or secured loan. These work very similarly to a secured credit card in that the lender has funds on hold to cover their losses if you are not able to repay the loan as agreed. And talk to your financial institution about what options are available to you. Now, there are also mortgages and auto loans. Mortgages are what you use to purchase a house or residence, and auto loans are what you use to typically buy a car, vehicle, or truck. So not like any other countries with borrowing systems, credit can be used for larger purchases such as cars or homes, mortgages, loans, or mortgages or home loans or installment loans that allow you to purchase without having the full purchase price up front. One distinct feature of mortgages and car loans is that it's typically a secured loan, meaning the home or vehicle is being purchased, and being purchased is considered as collateral. Collateral is something that has value that the loan is typically used to like hold it up per se. You're borrowing against it, and that item has value. If you do not make your payment as agreed, the financial institution can take possession of the car or home and sell it to recoup on the balance owed. So these processes are called repossessions for vehicles and foreclosures for homes. Larger loans, such as mortgages or auto loans, may require a higher credit score to obtain, and it is recommended to start with credit cards and personal loans to build a strong credit history before making larger purchases. Interest rates. This is the cost of borrowing money. Regardless of the type of credit you are applying for, one important thing to be aware of is interest rates. Interest rates are a percentage rate that creditors impose as a cost to borrow their money. What that means is borrowing money is not free. When you get a credit card, it's not free money. When you get a loan, it's not free money. When you get any type of extended here, I'm going to give this to you, it is not free money. You will have to pay that back. And each credit card, each loan, each type of lending vehicle will have different repayment terms, different interest rates, and different amounts that you must pay back. To add another layer of complexity to it, it will also be dependent on your individual credit score and your credit worthiness. Again, if you have a higher credit score, lower interest rate, lower credit score, higher interest rate. That doesn't negate the fact that you will have to pay some interest in some way, shape, or form. So if you're lending or borrowing something, you will pay it back, and you will pay back more than what you borrowed, and that is the interest. As an example, you may receive a credit card that has a $1,200 limit with the 15% interest rates. And again, we talked about interest rates vary, and there are many determining factors. Creditors may see you as a high-risk borrower if your credit score is lower, and can lead to you having a higher interest rate. Building and maintaining a strong credit score is important to reduce the costs associated with borrowing and having access to lower interest rates. Now, applying for credit specifically with an ITIN number. If you are an ITIN holder, some financial institutions allow you to apply for credit using your ITIN number in lieu of a social security number. If you already have a social security number, you can use that instead. Applying for credit cards or loans typically can be done online or in person with a financial institution of your choosing.
I know that we accept ITIN numbers for
Yes,
credit
we
cards
do.
at the credit union.
Yes, we do. Hopefully now you have a better idea of where to begin when it comes to credit. When in doubt, you can contact us or any other financial institution and or contact GreenPath for more in-depth credit guidance, leaving in for opening accounts. Here's the main takeaways. Credit scores are the numerical measure of your credit worthiness. So 3-digit number. And it's not going to be like an even 331. It will, I'm sorry, 300. It'll be like a random number, like 331 or 729 or like 672. And that is determined based on your own credit history and the habits you've had. If you're making your payments on time, high the number. If you're not, low the number. There are different types of credit, such as credit cards and loans. We talked about mortgages, which is used to buy a house, and vehicle and auto loans, which are used to buy cars and trucks and whatnot. And use credit responsibly. Make your payments on time and in full. We've said that quite a bit during this presentation, and I hope that indicates to you just how important it is to do so. Make your payments on time and in full, and contact your creditor if you feel like you may be late or miss a payment. Just because I'm going to say it one more time. Make your payments on time and in full. And the consequences of not making a payment on time and in full can stay on your credit report for quite some time. A missed payment can stay on there for up to 7 years.
Yeah.
And that's a very long time.
The good news is, as long as you do that, that's a really great way to be increasing that credit score.
Yes.
It's just passively increasing it. So
yes. As we wrap up, we want to leave you with some tips for long-term financial success within the United States. Trying to navigate a new financial system can be confusing and difficult. Even those who are residents here find it difficult and confusing.
yes.
We hope that today's presentation has provided you with some helpful starting points to establish your financial future here in the U.S. Now, make sure you have the correct documentation. This documentation in the US is surprisingly very, very important. Having some form of who you are, what you do, where you live, the bills you pay are incredibly helpful at establishing your presence here. And you want to have multiple copies of that if necessary. Some originals, some copies, keep them some with you on your person if necessary, or on your phone for easy access, and keep some at your house. So that way, you know what, in case no matter where you are, you have it with you.
That's right. Keep it in a safe spot too.
Absolutely.
First steps would be opening a checking and a savings account. Basically, you want to make sure that your financial institution is going to meet your needs. And when you open a checking and savings account, keep close track of all the transactions that you make in the checking account to ensure that it stays in good standing. I generally recommend automated your savings transfers to work towards your financial goals, to make sure you're always saving at least some of your money on a monthly basis so that you can be prepared if there's an emergency or to make any other big purchases in the future that you're going to need to do. Make sure you do some research to figure out which types of accounts and which type of institutions are going to be the best fit for you. Make sure you understand if they're going to charge you fees or if they have different ATMs or branches in your area in case you're worried about that kind of thing. So it's going to be important to make sure you do some research, open those different types of accounts, understand the terms of those accounts as well.
Okay, so now once you've established your checking and savings accounts, again, not all are created equal.
Yep.
You are in a position, I'm not saying you're ready, but in a position to apply for credit and begin establishing a strong credit score. Consider starting with a secured credit card and or a credit building or a secured loan to start building a mixture of credit history. Remember, we're going to say it again. Remember to make every payment on time every month and prioritize paying your entire credit card balance in full every month to keep credit utilization low. Quick tip from me to you.
Yeah.
If you are beginning here and you have no idea what's going on and everything we said, some like mumbo jumbo, big words, foreclosure, mortgage, what's going on, here's a very easy tip to begin building positive credit history.
Yeah.
One, you can just make your student loan payments on time and in full and call it a day and you'll be okay. 2, if you do want to go down the road of having a credit card, you can, let's say if you like watching Netflix, Hulu, or any kind of subscription services, you're watching TV, put one subscription service on your credit card. They're going to ask you, hey, how do you want to pay for Netflix this month? Give them your credit card information, let that flow through. Never touch that credit card again. And then when it comes time to making the payment to your credit card, you can set up an automatic payment from your checking account at any institution that you have and have that pay the credit card balance in full every single month automatically. So that way you continue watching Netflix in peace. Your credit card gets charged every single month, one small amount that's within your credit card utilization ratio. And you will have regular activity on your checking account every single month. So that way it pays it off in full. And then you never have to touch it again.
Yeah, so to be clear, if you pay off the full balance of your credit card every month, so like Terrence said, one thing on there and then pay it off full so that it's back down to zero, you'll be increasing your credit score and you will not pay any extra interest because there is no carryover of an amount to the next month.
Correct.
Really cool. That's the tip. That's the pro tip. All right, and then you just want to make sure that you practice healthy habits with your new accounts. Prioritize keeping a close record of all of your transactions to make through your checking account to ensure that you understand your available balance, make sure you know how much you have available to you, make sure there's no unauthorized transactions on there from somebody that may have somehow scammed or gotten your account information. Make all payments on time every month, and if you know you'll be unable to do so, reach out to your creditor as soon as possible to discuss options. If you're able to talk and communicate with them, they're going to be much more willing to work with you than being unsure of why you can't make your payment and not understanding what's going on. So many creditors actually have an option if you face a hardship, and they can sometimes help you. But if they cannot help you, and if you don't know what's going on, communicating with them is important so that you guys have an open line and understanding of what's happening.
Yes. And also be aware that you do not have to, I was going to say that you don't have to navigate this alone.
That's right.
There's a lot of help out there. We are here as certified credit union financial counselors. Credit unions exist, not just our credit union. Credit unions in general exist to be helpful to their members. So even if you do not join our specific credit union, please, I highly recommend that you build a relationship with one that's closer to you in general. So that way you have support and they will be more than happy to answer your questions.
And we actually have a great partner, which is GreenPath.
Bang, bang.
GreenPath is another nonprofit we partner with. They offer individual financial counseling and as well as like credit counseling and things like that. They speak over 100 different languages, so you can reach out to them. You don't even have to be a member of our credit union to be able to reach out to them. You can either call them and speak with someone or learn more on their website and sign up there. And you just need to let them know that we sent you, that the Harvard FCU sent you, that we referred you to them, and they'll be more than happy to help you with individual financial counseling to suit your needs.
So these are some resources that will help you and will kind of direct you. So these are the three three credit bureaus that I mentioned earlier. TransUnion is up in the right, Experian bottom left, and Equifax bottom right. The IRS is right there. There's a QR code that'll take you there directly. That's their direct address and their phone numbers. You can call them internationally or the US number. And please, if you just take a screenshot of this so that way you have it, because it's incredibly useful information for you.
Yeah. And then we do need just a quick disclaimer. This is not, we do this for educational purposes. We are not able to give tax, legal, or investment advice directly. The information we talk about here today is just sort of broad topic information about these different types of things. If you need to learn about how to apply these concepts to your own unique individual financial situation or possible hardship, depending, then you're going to want to make sure that you're seeking more direct counseling and direct advice through somebody like GreenPath or something like that.
We are certified financial advisors. We are not your certified financial advisors.
That's right. Yeah. All right, so we also do have another upcoming webinar this Friday, just about the elements of financial wellness, just some great other tips and tricks if you're interested in following up. That's going to be September 19th at noon. So just something you can follow up on if you want to. But that is going to be it for today's presentation. So thank you guys so much for coming. We are going to stay on for maybe just like another minute or so. If you guys have any questions, please use the Q&A feature on Zoom to ask your questions, because we're in webinar mode and so the chat is currently disabled. So if you have any questions, there's a Q&A feature. Sometimes you need to hit the little 3 dots that says more on the Zoom taskbar, and that will bring up the other options, and you should see Q&A on there. So if you have questions, please feel free to throw them in there. We'll do our best to answer them in the last couple minutes we have here. But if not, thank you all so much for coming today. You can always keep in touch with us. We have lots of different channels, as well as like emails you can ask questions to. You can reach out to us directly. We have all sorts of social media presence where we do different blog posts and tips and tricks. This presentation, as well as all of our webinars we do, are available for free on our YouTube, including multiple deep dives that we do about credit. So if you're like, they did that touch, but I need to know more information about that, you can go and look at our full hour-long presentation all about specifically credit. So that's another way that you can follow up with us. So I'm not seeing any questions come in. So thank you all again for joining, and I hope you have a great rest of your day. We're always here for if you need us. So
Happy
thank you for
Wednesday.
coming.